Good morning, everybody. I have 5 new long positions for Wednesday morning, 3 high quality, 2 speculative. Let's go over the 3 new long positions. All of them are very small asset allocation positions. OSIS is going to be 1% of my account capital. USAP is going to be 1% of my account capital. SNAP is going to be 0.5% of my account capital. The market is still not in a real strong uptrend, so there's no reason to risk more capital here than you're willing to lose. And I recommend new traders basically staying in cash right now, and or if you do go long, you go long something like USAP that is not extended from its moving averages. Stocks like OSIS, even though it's pretty close to the 50-day moving average, it is slightly extended. It's also extended from its 20-day moving average, just like SNAP. Avoid those stocks for now, and especially avoid the speculative names. So first thing first, OSIS is the only pure can slim quality stock. It's giving a hammer reversal candle over candle price bar pattern, volume surge, small bop surge. It isn't the best or most symmetrical pattern, but it is still pretty strong. I want to get long. Limit order 83.52. First cut loss level 82.15. The signal day is low. Final cut loss 80.59, a move below the gap up candle low of day. But 1%, it would have been 2%, but it's extended from the 20-day moving average. The next new long position, USAP. Bullish candle over candle, hammer reversal, price bar on above average volume with BOP confirmation. This is probably the quote quote safest trade out there. Nice symmetrical cup or saucer consolidation relative to the previous uptrend. I want to get long USAP, limit order 18.59, the high of the day since it's not extended. First cut loss 17.62, a move below the single day's low a day, and the final cut loss 17.30. Is it that day? Yes, it is. 8.30 is low a day. 17.30. It moves below there. I want to be completely out of the position. This was in my Cancel quality scan because it used to be a Cancel quality stock. It's also a future high quality stock, but right now it currently is not. So instead of a 2% position, it will just be 1%. And then the final long position, Snapchat, whatever you want to call this stock. Want to get long, limit order 14.49. First cut loss 14.01, this low here. Final emergency cut loss 13.35. It moves below the first cut loss level without closing below this low. I'll be moving up either half or all of my remaining stops, as I don't plan on holding Snap all the way back to 13.35. But as it is, 14.49 limit, 14.01 first stop, 13.35 second stop. This was in my Cancel scan because whenever a new highly liquid issue goes public, it gets placed into that scan. So it first showed up there, but it's not. It's really actually a garbage stock. But it was in my IPO scan, and I like new issues. So with the stock relatively close to its 20-day moving average, this is a pretty low-risk entry, especially if the stock can work back up to its July, June, May, April, and ultimately that 3.3 post-IPO high of day. Anyway, extremely short video lesson for this morning with those 3 long positions, all small capital asset allocations. Futures aren't doing much. Remember, this is seasonally the worst week of the year for overall market returns, in the middle of the worst seasonal period for stock market returns in the month of August and September. So continue to trade accordingly. As long as we make these small baby step moves higher and then one big flush down, it's going to be hard to make any real gains on an end-of-day basis. So unless you're day trading the right stocks in the morning, at the end of the day, it's just going to be a tough slodge here, because as you can see, each time we break out to new highs, it's immediately followed by a reversal lower before a shallow low is put into place, and the new highs comes again, and then we rinse and repeat over and over again. One day that will end, but I don't think it's going to end anytime soon in September, so prepare accordingly.